From this industry and from a growth perspective, we just think there's a great opportunity at this intersection of technology, connectivity, and real estate. These multifamily owners, they're increasingly adopting smart building technologies, and they need always-on, reliable, property-wide connectivity that works. And we're positioned to provide that. We really think about ourselves as a digital infrastructure partner for connected living, which is what we all live in this environment today.
That was George Pollock, Chief Financial Officer of Gigstreem, about some of the key attributes of the multifamily broadband market and why he is so bullish on this opportunity. Hi, I'm Jeff Johnston, and welcome to the All Day Digital Podcast, where we talk to industry executives and thought leaders to get their perspective on a wide range of factors shaping the digital infrastructure market. This podcast is brought to you by CoBank's Knowledge Exchange Group. The single-family broadband to the home market gets a lot of press, given all the government funding, the growth, and disruptive technologies entering the market. But what doesn't seem to get as much press is the multifamily market, where broadband operators work with building owners and managers to provide a robust, enterprise-grade network. It's a great business model that has a lot of growth, given the lack of housing stock in the country and the affordability challenges facing many single-family home buyers. George has extensive digital infrastructure executive experience, and as the CFO for one of the fastest-growing operators in this market, he has keen insight into this attractive opportunity. So, without any further ado, pitter-patter, let's see what George has to say. George, welcome to the podcast. It's great to see you. How have you been?
I'm great. Thank you for inviting me. I certainly look forward to our conversation and you providing us the platform to tell everyone more about Gigstreem and what we do and how we compete in this industry.
Excited to chat with you. I think you guys are doing some unique stuff, kind of unique go-to-market strategy. So I really think that listeners are going to walk away with a lot more knowledge after listening to you. So to get us started here, maybe you can just provide a high-level overview of who Gigstreem is, your business model, how you think about the market, and then from there we can get into some more detailed questions.
Sure, I can provide a quick overview. So Gigstream is a full-service internet provider purposely built for multifamily communities. So mostly apartment complexes, senior living, college housing. We focus on multifamily, think apartments. At a high level, we design, build, we can finance, and then we operate property-wide networks that deliver a seamless, always-on connectivity for the residents and the property owners. Business was founded in 2017, really with a clear mission: connection without compromise. And since then, we've scaled to almost 90,000 units across the country. We're in 26 states, and we're one of the fastest growing providers in our industry. We think about our model differentiated in a few key ways. We operate as a one-stop shop, so we handle everything. We design the network, we construct it, we provide the on-ramps for customers and tenants to sign up, and then we manage the network going forward with care, a knock, 24/7 support. The service it's not just internet. We're much different. So we deliver managed Wi-Fi as an amenity. So what that means is the entire property is wired. So you can walk out of your apartment, you can walk to the pool, you can walk through your parking garage, and you're always connected. It's always safe. It's always secure. That managed Wi-Fi is provided in partnership with our customers, the big property owners, so they benefit from incremental, not operating income from our service. So they're driving more profit and more enterprise value for their business. We also have some flexibility where we can fund the CapEx upfront. So we'll pay for all the infrastructure, allows flexibility for a property owner. Some want to fund it on their own and get a different ROI. Some want us to fund all of it. The two different models: if you fund it on your own, we charge a little bit less on the monthly recurring fee. If we build it all, obviously we're looking to get a return and we charge a little bit more, but the property owner underneath that gets an immediate return without any capital outlay. So it's just provides flexibility for our customers. From this industry and from a growth perspective, we just think there's a great opportunity at this intersection of technology, connectivity, real estate. These multifamily owners, they're increasingly adopting smart building technologies, and they need always-on, reliable, property-wide connectivity that works. And we're positioned to provide that. We really think about ourselves as a digital infrastructure partner for connected living, which is what we all live in this environment today.
So that's super helpful. And so let me just ask a clarifying question for myself. So your customers, I mean, who you bill or your direct relationship is with the property owner or the property manager. It's not so much the individual tenants. Is that a correct assumption?
Mostly. So and our strategic focus is on property owners, and we sell a bulk managed Wi-Fi service. If a property has 300 units, we build out a managed Wi-Fi solution for the entire property. As I said, ubiquitous across the entire environment. The owner then pays us a monthly fee for all 300 units. Okay, they will typically then charge a higher fee to the tenant, either as a internet service, a technology fee, or some other methodology. Sometimes there's a revenue share with the property owner, but for the most part, we sell a wholesale take or pay service to a property owner. And part of that reason is because it's ubiquitous across the entire property. That's quite a bit of capex and infrastructure. It's a meshed service, so there's access points in everyone's apartment as well as access points all over the property. But it's not just a cable modem in your room.
That's super helpful. And then, maybe just talk through a little bit around like some of the strategic thinking behind this particular business model, which I find really interesting for a variety of reasons, where you're really focusing on multi-dwelling sort of units versus I'll call it a more traditional, fiber to the home broadband operator. Obviously providing the same service, but going to market in a very different way. So maybe you can just kind of help me understand sort of the puts and takes between those two strategies.
Fiber to the home is a big and growing business across this country. There's plenty of really successful providers. We compete with them sometimes. Most of them aren't really focused on multifamily or maybe not do it as well as they would like to. It's a different product. A lot of those fiber companies around the country are vendors. So we're bringing in redundant fiber into our buildings, and we want to be the best in class provider on the property. So getting to the property, however we can get there. Sometimes it's dedicated internet. Sometimes we end up going through a data center, but we're trying to pick the best provider. The market's moving to more redundancy. It really wasn't like that a few years ago, but I think we're trying to drive that in the market from a quality perspective. In this space, it's getting more to enterprise class, but there's lots of outages for some reasons you can't even make up. Like someone unplugs your router in the office, you're out, right? Fibers get cut in this country. It seems to be on a daily basis. It's hard to react and fix that because they have to, sense through the network and where it happened and then go fix it. So we're really a proponent of redundancy on the fiber coming in, and then we want to be the best in class on the property. So what does that mean? From the design, we start with the first walkthrough on the property. We need to understand what the layout is and what the topology is. A garden style with multiple buildings is a lot different than a high rise. The costs are a lot different. You're running thousands of feet more fiber. You have more distribution boxes. You may have more access points. So we start with the design. We model that. We actually, once we design and build, then it's engineered. We walk around with technologies that heat map the entire property. So we know where there's dead spots. We know how to fix them. As I said before, the access points we use have intelligence in them. So they're always pinging and polling, and they know, and you can sort of turn up those devices or turbocharge them or not. And sometimes you don't always want them turbocharged because they mesh and they conflict. We're using a few different vendors, but Ruckus right now is a principal vendor on their R1 product, which brings in this AI intelligence. AI gets thrown around a lot, but in these devices, it's real. We had a property with Ruckus AI units all over, and we were having degradation because we had a conflict from an outside signal. We were near an airport. A human being can never figure that out in a timely manner. In a couple of days, we drove down, sort of 80 conflicts to 2 and fixed it. It's not a one and done. It's continually working the networking, continuing to get better. So it has to work, and it has to work all the time. So that's been our maniacal focus on improving design, improving the construction, improving the engineering, and then post that supporting the service for our property owners and our residents.
So look, with that kind of intense focus on network design, redundancy, support, I would think that your market share numbers at any one particular building is probably pretty good. I mean, you working with the building manager, you're providing, I'm sure, better service than anybody else could, right?
Yeah, so that's actually a good question. So, and I didn't mention this up front, but with these property owners on our bulk service, it's an exclusive service where essentially the only one they are. There's certain regulations where you have to allow a carrier access and they can determine whether they're going to overbuild. There are certain states where you can opt in or opt out. There's a couple other states where we can do, and we're doing a couple of these on greenfield builds. So they're brand new buildings where bulk isn't really enabled through regulation, but we can be the exclusive provider and work exclusive marketing agreement. So they have to allow a competitor to come in, but if we're there, greenfield exclusive, we build it day one with exclusive marketing. Typically, it's not going to get overbuilt by somebody. So therefore, in that model, then we really have to work with the property manager and their local managers on site because we've got to drive penetration. The property owners and property managers are certainly incented because we're providing a great internet service. There's real value creation for what we do besides just offering good internet services. There's a real cash flow element of this that benefits them.
I appreciate you clarifying that. The other thing I like about this business model, you tell me if I'm thinking about this right, compared to a more traditional model is, I mean, you're probably dealing with very large, sophisticated institutions, property owners and managers that have strong balance sheets. And so your risk of kind of bad debt and certainly churn are a lot lower than say a traditional fiber to the home operator. Is that a fair kind of characterization?
Yes, again, for the most part, in most of our business, are large property owners, large public REITs. And as I said before, there's different financing options with our product. They tend to fund it on their own or finance it on their own. We charge them a lower fee, as I said, and then they charge a higher fee to their tenant for that service in some form or fashion. Having said that, there's a very big market for smaller players. And when I say small, they still may own 5, 10, 15, 50 properties, right? They may not want to use their balance sheet for internet because they've got to refresh rooms, they've got to refresh pools, they want to put a weight room in. Now the big thing is pickleball courts everywhere. So they may not have the capital for internet. That's where we come in. Last summer, we raised $100 million through an ABS structure. Houlihan helped us. It's two of the largest insurance companies in the world. You know what your audience knows ABS very well. We were the first provider in the industry to leverage in ABS. There's been a second one now since then, but we were the very first in the industry to tap that market. And how do we do that? Backed off to property owners, right? Their balance sheets, their cash flows were long-term contracts. They're stable. It's fixed recurring revenue, relatively fixed cost.
Hey, George, so talk to me a little bit about your decision criteria for new markets.
Tampa's our biggest market by city, and Texas is our biggest market by number of properties, and then Florida's second. We're in 26 states, so quite a bit of presence in the Northeast and Boston, New York, with some fixed radio wireless businesses that we purchased a few years ago. Southern California, we have a fixed radio as well. We like the Sun Belt, we like the Southwest, we like the Midwest, partly because of regulatory reasons. It's just easier to do business. It's not agnostic. It's agnostic towards bulk. We're allowed to provide the service. Property owners like it. So historically we've followed a lot of our property owners as they've built or bought. These guys are super acquisitive and they buy and sell quite a bit. And if they're buying, one of the things they like to do is upgrade internet, and we'll come in and redo it for them. A lot of it's tied to legacy contracts, but it gives us a nice pipeline over a couple of years as we work with our partners, the big guys, to do that. So we follow them quite a bit. We do like density in markets. So, whether it's Dallas or Tampa, Orlando or Denver, Austin, we like to go deeper in our market. There's a lot of synergies around that. We can hire construction teams in market. We can hire technical folks in market. You're not paying a third party, a lot less travel. So that helps. We'll expand geographically, sort of from that, either with property owners as they go into new, or as we think about extensions around those markets to stay somewhat dense. But you think about it's typically larger cities where there's lots of apartments, there's lots of growth. So those are sweet spots for us. They really work. We already have business there. We have network there. So it's just easy for us versus going to really top brand new markets. We tend to do less of that unless it's with a partner.
That's super helpful. So I would curious to get sort of any advice you would provide fiber to the home, kind of fiber to the premise operator. If they were looking at this market as a growth opportunity, what two or three things would you say that they should consider? Because it does feel it's quite a bit different operationally and strategically than what they're presumably doing today. Sounds like one would be you got to be in big cities or tier one, tier two cities, I'm guessing. Any other advice you would give folks that are listening to this that are thinking, hey, maybe this is a market I should look at entering?
Yeah, and I think this certainly can fit in rural markets as well. It's, our sweet spots, we like properties that have at least 200 units. 3 to 800 is better for us economically. So I don't want to say that it's only bigger markets. The rural markets work as well if there's a need. It's a completely different business than fiber to the home. It's a network business. When we go in and deploy an apartment, we're wiring the entire property. So when a new tenant comes in, they go on their app and they sign up. We're not rolling any more trucks. The access point is there, so we can sign everybody up. They log in and they're done. The user experience is it's instant on. When you're there, it's instant on. It's seamless across the property. And we have a super high touch response. So if something doesn't work, you call us and it's fixed. The design's different, the install's different. As I said before, we heat map the entire property with technology to make sure we're overlapped and it works. That's important. Again, I mentioned property wide, and also our service, we're partnered with the property owner. We work with them, they're getting profit, we're getting profit. So it's a partnership. And we have complete flexibility on financing. So property owner may want to pay for it. If we need to finance it, we'll finance it. And it's literally zero CapEx to a property owner. Now, I mean, they pay higher on a recurring revenue. They still make a profit, but day one, they have brand new internet. It's a great selling service for their customers. So it's a different business. It's a different network deployment. It's a different level of service. And then it's a different economic model.
But lots to like, though, I'll tell you.
Lots to like. And sort of one last stat here. If you look at the property owners, just look at their investor decks, and they speak about their business, which is a little bit under stress the last couple of years, a little bit of overbuilt, rents have come down a little bit, but macro, we're still short in this country on housing. You look at their reports and their analysis, 5 to 10 million apartments need to be built in the next 5 to 7 years. Very big numbers. So they've got a really good macro trend. The machinations with price and occupancy obviously work themselves out, but clearly having great internet is only going to get more important for them.
Outstanding. Great stuff. I really appreciate you walking through all that. Thanks again, George, for making time today. This was wonderful. So I appreciate it.
Thank you. Appreciate it.
A special thanks goes out to George for being on the podcast today. I have a couple of takeaways after chatting with George. First off, I think this is a great business, and if managed correctly, it can generate a reliable and predictable cash flow stream, which I think is evident by the securitization deals George has done. And secondly, it's pretty clear to me that it's a specialized part of the market that requires capabilities and relationships and go-to-market strategies that are different than a typical fiber-to-the-home operator would use. Hey, thanks for joining me today. And a special thanks goes out to my co-bank associates, Christina Pope and Tyler Herron, because without them, there wouldn't be an all-day digital podcast. Watch out for our next episode.
The information provided in this podcast is not intended to be investment, tax, or legal advice and should not be relied upon by listeners for such purposes. The information contained in this podcast has been compiled from what CoBank regards as reliable sources. However, CoBank does not make any representation or warranty regarding the content and disclaims any responsibility for the information, materials, third-party opinions, and data included in this podcast. In no event will CoBank be liable for any decision made or actions taken by any person or persons relying on the information contained in this podcast.